Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 134, recorded here on September 22nd, 2024. This podcast is for entertainment only and is not investing advice, so please do your own homework. All right, well, we have the week market update outlook from last week and weekly top Bitcoin news. We'll get into this week's featured post on the Substack last, and we'll end with shoutouts. Jumping right into market news, it was a historic week for Wall Street, with the benchmark S&P 500 taking out and closing above the 5,700 points level for the first time ever. Meanwhile, the blue chip Dow surpassed and ended above the 42,000 points mark for the first time ever. So all-time highs in the stock market. Everything's going great. The advance was driven by what was undoubtedly the most important event of the week, or for that matter, in recent memory. The Federal Reserve on Wednesday delivered its first interest rate cut since the COVID-19 pandemic 4 years ago. And it was a bumper 50 basis point cut at that. After taking some time to digest Wednesday's developments, market participants took heart from the central bank's willingness to be aggressive in terms of monetary policy and strengthened bets that the Fed would be able to deliver a soft landing. That led to U.S. stocks ripping gains on Thursday, and the S&P 500 and Dow achieving the 5,700 and 42,000 milestone, respectively. Aside from the Fed, there were some major earnings-related moves as well this week, the most notable of them being a plunge in global economic bellwether FedEx after the parcel delivery giant missed quarterly estimates and lowered its annual guidance. For the week, the S&P 500 added 1.4%, while the Nasdaq composite swelled 1.5%. The blue chip Dow climbed 1.6%. Looking ahead, coming off a historic few days sparked by the Fed Reserve's bumper half-point interest rate cut, Wall Street will have plenty to look forward to next week, including a plethora of central bank speakers. Traders will be curious to hear more thoughts on the rate cut and any guidance on future monetary policy easing. Of note, Fed Chair Jerome Powell will give opening remarks via pre-recorded video at the U.S. Treasury Market Conference on Thursday. Next week's economic data sees growth indicators in the form of September flash PMIs, the third estimate of U.S. Q2 GDP growth, and the core personal consumption expenditures price index, which is the Fed's favorite inflation gauge for August. The earnings calendar will be fairly light, with a few major names on tap, such as memory chip maker Micron Technology and discount retailing giant Costco. All right, jumping into the weekly top Bitcoin news, we'll start with Bitcoin.com. Week in review. Let's see what's in here. We'll try to skip over the shitcoinery. Economist and gold advocate Peter Schiff has sounded the alarm on the Federal Reserve's latest actions, linking a significant rate cut to rising gold prices and a weakening U.S. dollar. His warning about a deepening recession and rising inflation adds weight to concerns about future economic stability. It's game over for the Fed, Schiff stressed. MicroStrategy has revealed plans to acquire additional Bitcoin after completing a $1.01 billion offering of convertible senior notes. This move comes as part of the company's ongoing strategy to use proceeds from debt and equity financing to accumulate Bitcoin as a Treasury reserve asset. We'll dive a little deeper into that later on. A Bitcoin investor has pleaded guilty to underreporting his cryptocurrency gains, including $3.7 million from Bitcoin sales, resulting in a tax loss to the Internal Revenue Service of over $550,000. The Department of Justice emphasized that taxpayers must accurately report crypto transactions to the IRS. The Bitcoin investor now faces up to 3 years in prison, along with fines, restitution, and supervised release. They are coming. President Nayib Bukele revealed that he would present a self-financed budget proposal to the Legislative Assembly of El Salvador, meaning that the government will not issue debt to pay for its operations in 2025. A balanced budget. Huh. Bukele stressed that this would be the first time this happened in decades, highlighting the relevance of independence and self-sufficiency for the country. Coinbase and Ripple legal chiefs Paul Grewal and Stuart Alderoty have criticized the U.S. Securities and Exchange Commission for its inconsistent approach to classifying tokens as securities. Grewal referenced footnote 6 in the SEC's amended complaint against Binance, where the agency admitted creating confusion by labeling tokens as securities. He also pointed out that the SEC's contradictory handling of Ethereum transactions. Alderoty echoed these concerns, cautioning, Ripple's case is over, but the fair notice defense is still alive for others. Next up, the Hodler's Digest for September 15th through 21st. This is from Cointelegraph.com. We'll see what they have to say and try to avoid shitcoinery. The U.S. Republican Party presidential nominee Donald Trump appears at PubKey, a New York City bar and restaurant famous for accepting Bitcoin, becoming the first former United States president to use the cryptocurrency in a transaction. According to a September 18th post on X by PubKey, Trump used Bitcoin to purchase hamburgers at the New York City bar. Bitcoin advocate and professional capital management CEO Anthony Pompliano was in attendance at the campaign stop, which was also reported on Trump's Truth Social account. The event came less than 2 days after the Republican nominee announced the launch of a token through the World Liberty Financial crypto platform, which is run by members of his family. Despite once calling Bitcoin a scam and crypto based on thin air, Trump has advocated for Bitcoin miners as part of his 2024 campaign and spoke at the Bitcoin 24 conference in Nashville, Tennessee. Unfortunately, though, he's a shitcoiner. A Republican lawmaker chairing a House subcommittee overseeing digital assets heavily criticized the United States Securities and Exchange Commission and its chair, Gary Gensler, for inserting politics into regulating crypto firms. In a September 18th hearing of the House Subcommittee on Digital Assets, Financial Technology and Inclusion, Arkansas Representative French Hill claimed that Chair Gensler's approach to digital assets has led to confusion and uncertainty in the markets. At the Dazed and Confused Breaking Down the SEC's Politicized Approach to Digital Assets hearing, the subcommittee chair suggested alternative regulatory routes for crypto, such as Financial Innovation and Technology for the 21st Century Act currently moving through Congress. The pro-FIT21 and pro-regulatory framework views of the majority and many bipartisan does not mean we're against the SEC going after bad actors or modernizing existing rules to incorporate digital asset securities and other unique instruments, said Representative Hill. We're against SEC enforcement abuse and making it hard for legitimate actors who are trying to follow the rules to do a fine job and bring innovation and technology to our markets. BitMEX co-founder Arthur Hayes believes the United States Federal Reserve's recent rate cut was likely politically motivated and could impact markets and inflation. Speaking to Cointelegraph at Token 2049 in Singapore on September 18th, Hayes shared his thoughts on the Fed's recent action, speculating it could be part of an effort to bolster support for the Democratic Party. I have a macro view that Jerome Powell, Federal Reserve Chair, and Janet Yellen, Treasury Secretary, want to juice financial markets to help Kamala Harris win the election. On September 18th, the Fed cut U.S. interest rates by 50 basis points in a move widely anticipated by investors and analysts. Hayes said this could have significant implications for both traditional and crypto markets and potential long-term consequences for inflation and economic stability. He pointed out a disconnect between rate cut and current economic indicators, stating that the U.S. economy shows strong gross domestic product growth while unemployment remains low, according to historical standards. Binance CEO Richard Teng says his team has been working across the clock to bring Tigran Gambaryan home to the United States as the executive's health declines daily. We have appealed to the Nigerian government repeatedly to release Tigran so that he can go home and get the proper medical treatment that he needs. There's no need to hold our staff. He's held unjustly, unfairly, Tang told Cointelegraph at the Token 2049 conference in Singapore on September 19th. It is distressing for all of us, said Tang, especially for the families. For us at Binance, this is a top priority for us. We have a task force internally working across the clock looking for different avenues from legal to political. The Binance CEO hopes the U.S. can designate Gambarayan as unlawfully detained to speed up that process. He added that Binance has also tried to appeal to the Nigerian government to release Gambarayan on humanitarian grounds. FUD of the week. Cryptocurrency hackers have taken over the Supreme Court of India's official YouTube channel to run a Ripple and XRP scam. On September 20th, the official YouTube channel of the Supreme Court of India, with over 217,000 followers, was rebranded into a Ripple-themed account to run a cryptocurrency scam. The hackers used the channel to play a fake live-stream video featuring Ripple Labs CEO Brad Garlinghouse. It also urged potential victims to invest in the scam, promising unrealistic returns. In addition, the hackers renamed the channel, changing the URL and deleted all the previous videos uploaded by the account's original owner. However, YouTube later had to delete the compromised channel, citing this channel was removed because it violated our community guidelines. Uh-oh. The United States Securities and Exchange Commission revealed that it is seeking monetary and legal sanctions aimed at compelling billionaire Elon Musk to appear for a scheduled testimony after the entrepreneur allegedly failed to appear and provide testimony to the financial regulator about the $44 billion purchase of the Twitter platform in 2022. More specifically, the SEC intends to file sanctions against Musk, ordering him to show cause for why he should not be held in civil contempt for allegedly violating the original terms of the agreement stipulated in the May 2024 order, which established the September 19th date for the testimony. The SEC also seeks monetary relief to recoup travel costs lost by Musk canceling the meetings and all of the relief the court may grant the SEC. According to court documents, the meeting was originally slated for September 19, 2024, and representatives from Musk purportedly sought to have the date rescheduled several times. Montenegro's Ministry of Justice could decide whether to extradite Terraform Labs co-founder Do Kwon to the United States or South Korea after a decision from the country's Supreme Court. In a September 20th notice, the Supreme Court of Montenegro said it had submitted Kwon's case to the Justice Minister after ruling on a request for protection of legality. According to the High Court, South Korea and the U.S. had met the conditions for applying for Kwon's extradition from Montenegro to face criminal charges. The Terra ecosystem collapsed in 2022, one of the first dominoes to fall in a series of bankruptcies affecting crypto firms, including Celsius, FTX, and BlockFi. The U.S. and South Korean authorities filed charges against Kwon and some of his associates for their alleged role in the platform's downfall, but the Terraform co-founder's whereabouts were largely unknown until he surfaced in Montenegro in 2023. All right, moving on. This article is from CoinDesk, and this was posted on September 18th. Arthur Hayes, if they go 50, that will be a nuclear catastrophe for financial markets. BitMEX co-founder and Maelstrom CIO Arthur Hayes sat down with Markets Daily host Jennifer Sanasi and Bradley Keown, CoinDesk's managing editor of tech and protocols, to share his insights on whether a Fed rate cut of 25 or 50 basis points could lead to financial turmoil or a short-term rally. He also explores the potential ramifications of government spending, inflation, and the reliance on fiat currency systems across major economies, and the dynamics of Bitcoin in relation to traditional markets. The Federal Reserve meeting is happening now in the United States. What do you think we're going to see, and how's it going to impact markets? Arthur Hayes responds, so the question is whether they're going to do 25 basis points or 50 basis points. I, at a high level, think that they should not be raising rates. I believe that the U.S. economy is quite strong. If you've seen the GDP prints over the last 8 or 9 quarters, it's been consistent growth. The US government continues to spend an insane amount of money, which is keeping economic growth at a very fast pace. And obviously, that helps with the reelection chances or election chances of Kamala Harris and her running mate, which I think is the goal of the current Democratic administration. So the Fed cutting rates when you have massive government spending, you have inflation that's above their target. I think it's a mistake. Inflation is going to accelerate into the fourth quarter if they decide to continue cutting rates. And I think that the response is going to be if the markets start to falter, they're just going to do more of it and they're going to make the problem even worse. So if they do 25 or 50, the markets react the opposite of what they believe. I think everyone believes that the markets are going to go up. If the more they cut, the more the markets go up with stocks, bonds, cryptos, all that kind of stuff. I actually take a contrarian view that, the more they cut, the more the markets are going to dislike that, maybe 1 or 2 trading days after the fact, but they're not going to learn their lesson. They're just going to keep doing more of it. So we're going to get a very quick cutting cycle. So that's my view. Dig a little deeper into that. Let's say they cut rates. How do you think the markets will react? And more specifically, how do you think the crypto markets will react? So I believe, and I've written extensively about this, that the most important macroeconomic variable is the dollar-yen exchange rate. And so the dollar exchange rate weakened a lot because the BOJ cut rates at 0 or negative, and the Fed and every other major central bank raised rates starting in March of 2022. So the differential widened a lot. The dollar yen went to about 162 on the top side, and then a few things happened. The Fed signaled that it was ready to start cutting rates in the summer of this year, and the BOJ indicated that it would start raising rates, and it did raise rates 15 basis points on July 31st. And we saw in the subsequent week, markets were down 10% around the world. If the Fed's going to do 25 or 50 or however many basis points, it's going to go down. And now in the subsequent meetings, it's going to continue to narrow that differential. Dollar yen will continue to strengthen. The yen strengthens, the actual nominal value goes down, and people continue to unwind positions, which removes leverage from the system. Stocks go down, and I think yields go up. I think crypto sort of TBD. And so, what do you think about Bitcoin? Does that decoupling happen right away, or does it happen some other time? I don't think it happens right away. I think if we get sort of a massive sell-off, people sell what they can, not what they want. Bitcoin is a very liquid asset. People have a lot of illiquid assets on their books, especially if you're an investment manager. So if you have some Bitcoin, you dump it. If the basis comes down even further than where it is today, sort of, that's the difference between Bitcoin and futures contracts. You see large hedge funds like Millennium and these shops who put in the spaces trade starting with the ETF launch earlier this year. They unwind those positions and sell Bitcoin spot into very illiquid markets. So I think Bitcoin goes down with the rest of the markets. But quickly, as we sort of see a financial collapse in the early stages, Bitcoin will say, okay, I believe that the markets will respond positively to more printed money. Treasury Secretary Janet Yellen and Fed Chair Jay Powell can't afford a financial collapse a few weeks before the election, especially if they want Harris to beat Donald Trump. And not to dial in too much, but Bitcoin is currently right around 60 grand. If we get 50, where does Bitcoin go? If we get 25, where does Bitcoin go? Do you have that specific prediction? I think 25, no, unchanged. Not much is going to happen. I think everyone expects 25. I think if they go 50, that will be a nuclear catastrophe for financial markets. 1 or 2 trading days after the effect, you'll see a massive rally and everything because everyone believes that the more they cut rates, the better. But I actually think it points to a deeper rot in the global financial system, and that will come through in much more depressed prices after the fact. Samson Mao was on Markets Daily recently and predicted that Bitcoin could hit $1 million in 2025. That video saw a lot of reaction from the CoinDesk audience, a lot of engagement. What do you think of that prediction? Could it hit $1 million next year? Sure, but I don't think it will. I still have $1 million price target. I'm more of a 2026, 2027 sort of person. Next year, we really get a ramp up in fiscal spending regardless of who wins the US election. And if the US dollar declines a lot, then China has room to enact stimulus as well and keep the yuan stable. And then you have the rest of the major central banks following in the footsteps of the Fed. They look at the Fed, they're easing, so we can ease too. We can do as much as the Fed is, and our exchange rate isn't going to get trashed. And so that's what I think happens once you get the new president whoever it is in the US, because both Harris and Trump are committed to spending lots of money. Trump is committed to cutting taxes, and Harris is committed to welfare payments. Arthur, I was listening to a podcast you were on not too long ago, and you were talking about how you think that this cycle is the one where I think your terminology was the sovereign debt breaks. And I'm curious, when you talk about a cycle, what is that cycle that we're in now? How long is that cycle? I don't know how long the cycle is really. It depends, but I believe that. If you think about the global reserve currency, the US dollar, and all the wars and all the spending that needs to happen to keep the system intact, we're at this precipice where you can go either way. You could have a sort of massive austerity, massive deleveraging, maybe a revolution, or the authorities can try to keep things stable by fixing the price of government bonds and printing as much money as possible to placate their electorate, whether that's in the United States, that's in the EU, China, Japan. Every single major economic bloc or country runs a similar sort of fiat fractional based financial system, regardless of whether they're democratic, autocratic, communist, capitalist, whatever. Those are all smokescreens. At the end of the day, everybody prints money. Everybody has a fiat fractional banking system. Everybody needs inflation. Everybody needs to take their savers' wealth and steal it so that the government could afford its spending programs, whether that's to fund wars or that's to do Green New Deals or it's to onshore production or it's climate change policies or it's welfare payments to the poor individuals who are losing out in sort of this economic transformation, AI, and all this kind of stuff. There's so many reasons why the government needs to spend money and not try to tighten its belt and restore confidence in these fiat currencies that we exist with. The question is, can they just continue to keep things going? Sure. And Bitcoin can go to 1 million to 10 million. Bitcoin's what, 1.7 trillion market cap. It's magic internet money that we created out of thin air, starting in 2009. Bitcoin is the antidote for what has happened. Yes, okay, they've printed a lot of money globally, and the US being the most egregious with it. And the reaction has been Bitcoin, and we have this cryptocurrency ecosystem that has thrived based on all this printed money. And we have all these different types of assets that are created and have value because we have such a fucked up financial system. So I say they're getting away with it. Bitcoin's a smoke alarm. It's telling us that there's something wrong here. When you look at the crypto markets, when you look at the commentary around crypto markets, I know you create a lot of your own content. You participate in a lot of content like this podcast. What are people not talking about enough? Patience. I think everyone is thinking Bitcoin needs to go to $1 million today, next year, because I took a bunch of leverage or my whole net worth is in this particular cryptocurrency, and they hear the things, the imminent collapse, all the debt. They're asking, well, why isn't it happening yet? Why not now? I see all these things. I believe what you're saying. It's super fucked up. Politics is fucked up. Finance is fucked up. And why isn't Bitcoin responding? Or why isn't the crypto that I own responding? And I think it's just patience, right? It's been a little over a decade, and we've created this entire new financial ecosystem. We've had millions of people around the world who have Bitcoin, Ethereum, Solana, whatever wallets. It's a very successful financial experiment to date, but it's not going to just all of a sudden just go to some ridiculous value just because you have a lot of leverage or you bought a lot of it yesterday. So I think patience is something that people need to understand, because if you believe in the math and the law of compounding interest, then it's inescapable. The system must print money, must debase the currency to attempt to survive, and every other major civilization has done just the same thing. And at the end of the day, inflation is hoisted upon the people, and some sort of revolution happens. So the history is 100 for 100. Just wait. Arthur, just to get into one of the specific market factors that have emerged this year, which is all the ETFs, you previously traded ETFs at Citigroup, so would love to hear. And again, I was just listening to this other podcast where you were talking about kind of role of the market makers and that dynamic, but curious. But generally speaking, what is your kind of big take on what are the implications of now ETFs being kind of a major factor in the market? So I think at the end of the day, ETFs are for people who want the price performance of Bitcoin. They don't want to own Bitcoin. They don't want to be their own financial institution. They want to outsource that to Larry Fink, BlackRock, and all these other major institutions, which is fine. Bitcoin can do whatever you want with it. What does that mean? You're a passive investor and you're not actually using the protocol. So if we take this to the extreme and every single Bitcoin is owned by BlackRock or a similar sort of institution, then the network goes to zero because no one's actually using it. So the reason why Bitcoin has value is because we use it. It's not like gold. I can hold gold in a vault for returning it's still gold, so the chemical property of being gold. If I don't do anything with the Bitcoin, then the miners don't get paid and the network dies. And that's a fundamental, very nuanced difference between Bitcoin and gold, which I think is not a problem today. It could be a problem in the future, but at the end of the day, if you're thinking about why now, why did BlackRock get in their ETF approval in 6 months and the Winkle clowns couldn't get one in 10 years, right? Live in New York. They're both billionaires, both very rich. Why weren't they given one and BlackRock was given one in 6 months? Well, at the end of the day, if you want the same financial institutions to control the wealth that can ultimately be appropriated by the government at the flick of a switch, BlackRock is just another arm of the US government, just the same as any other large Chinese asset managers is the arm of the Chinese government. If people don't use Bitcoin, it goes to zero. It doesn't function the way in which everyone who operates in this industry wants it to function. Talk to me about what could happen in the future there if this happens, comes to fruition, people aren't using Bitcoin. What does the problem look like? It looks like revenue for miners goes down. It looks like how they afford the capex, difficulty adjust, that kind of thing. I mean, I think it's a very long tail sort of situation if we don't have any use cases for Bitcoin. And obviously, that's sort of why I love ordinals and Bitcoin layer 2 D files, these sort of things. Like, let's pay the miners, let's do something with this thing and create some usability for people so that people are using it, people are spending money, and we sort of take this problem and remove it as a problem from the future. You've done some really interesting things this year at Maelstrom, which is your family office, your investment fund, right? And you launched this Ordinals inscription series, the Airheads, which is hilarious, by the way. Thank you. I guess I'm a flexi coiner, an avid shit coiner, but if I think about the taxonomy of how I look at crypto, Bitcoin is money. No other crypto is money. It's the hardest money that we've created in human history. Bitcoin cares about the security of the network. Bitcoin cares about an immutable blockchain. Ethereum is not money, regardless of what people say. They decided not to be money in 2016 when the community allowed a hard fork to happen to pay back the DAO hack folks. Ethereum wants to be the best decentralized computer ever, and it is so far. I put Solana in that camp. Obviously, I'm a big Aptos person right now. They're trying to enter the sphere, and then you have a lot of other applications. They want to do something on one of these networks. Decentralized finance is something I'm very passionate about because I believe that the rest of the world should have access to financial products at the ease of going on the internet and clicking a few buttons, which is not really the case for most people out of the United States and Western Europe. They have pretty fucked up financial systems. That's why DeFi makes sense for these folks. So I like all this stuff. It's all an experiment. You know, some things are 10 years old, 15 years old. Bitcoin and other things are less than a year old. But we're trying to sort of create a completely new system and give anyone with an internet connection a choice of how they want to save, how they want to invest, how they want to express themselves culturally over the internet. And for your NFT collection, like why you chose to go now on Bitcoin ordinals inscriptions, what was that? What was the thinking there, or what was your goal for that project? So we're an investor in Oil Wallet, and I met one of the guys, by the way, at Bitcoin Nashville at the party at the Parthenon and talked to him for a while. But anyway, go ahead. Yeah, so we're an investor in this wallet, and how do we create some buzz about ordinals? Well, let's do an ordinals drop. So now I don't want to do another, PFP 10,000 AI generated collection. We've done that to death. So what can we do that is specific to ordinals that you can't do on any other protocol? So that was something to do the recursive inscriptions. We want to show artists and creatives, look at what we've done here. I actually don't care what happens to the price of these things. I just want to see people be inspired to do other things, show the capabilities of the oil wallet. Here's what you could do with this and show the capabilities of ordinals. What sort of creative minds can create something completely unique that can only exist on ordinals that further? Okay, got it. Yeah, that's really funny. That's really the goal. I mean, of course, I hope that all these airheads are super, super valuable in the future, but really the goal is to inspire others to do other sorts of derivative works using ordinals and inscriptions. So interesting interview. I always like to hear his takes. Not a big fan of his shitcoining, but he certainly gets Bitcoin very well. And he certainly understands the root cause of the problem in the financial system. Next up, this is from Bitcoin.com. BTC miners increase earnings with fractal Bitcoin mining. The blockchain protocol Fractal Bitcoin continues to harness 226.19 exahash per second of merged mining hash power from the Bitcoin blockchain to fuel its sidechain. Additionally, 18.1 exahash per second of permissionless mining bolsters the network's operations. On-chain data shows that so far, a total of 40,354 fractal Bitcoin blocks have been mined, with around 2,068,925 FB tokens in circulation. Each FB is currently trading at $12.91, bringing the total market value to $26.8 million. This market valuation places FB in the 674th position among the more than 10,000 crypto asset market caps. Mining metrics show that 103.4 exahash per second of Fractal Bitcoin's merged mining hash power comes from unknown Bitcoin miners. The mining pool giant Antpool dedicated 82.34 exahash per second to Fractal Bitcoin out of its 170.74 exahash per second allocated to the Bitcoin network. In addition to that contribution, F2 Pool contributes 25.48 exahash per second, and Spider Pool dedicates 7.72 exahash per second to Fractal Bitcoin. Permissionless mining pools supporting the network include F2 Pool, Spider Pool, Maxi Pool, MoonX, SoloFractal, and Fairpool. Currently, 32.3% of the 2 million FB tokens in circulation are held by the top 5 wallets, showing a high level of concentration. The largest wallet alone controls 15.7%, with all 5 addresses holding a combined total of 668,631.54 FB, while FB is priced at $12.91 per coin. Just last week on September 15, 2024, it reached $38.80 before falling by more than 61%. While there's 2 million coins in circulation, FB's supply will continue to grow. With a max supply of 200 million FB, the fully diluted valuation would increase to $1.3 billion using current FB exchange rates. In the past 24 hours, FB saw 18.79 million in global trading volume, accounting for only 0.03523% of the 53.352 billion traded throughout the entire crypto market. Despite the recent dip, mining pools are cashing in some extra income by mining the sidechain alongside Bitcoin. Each block currently generates 32 to 34.5 FB, which currently translates to just under $495 per block. One of the wallets controlled by F2 Pool holds a hefty $388,000 in value, or 30,128.73 FB tokens. Another F2 Pool address commands 10,318.35 FB, valued at $150,000, while one of the Ant Pool's Coinbase reward address boasts 22,922.6 FB, worth $335,000. This additional revenue for miners contributing to FB mining while also securing the Bitcoin network comes at a time when profits from Bitcoin mining alone have been tough. Earning over $500,000 in less than 2 weeks is no small feat. So, not excited about the shitcoining, but I think it's probably good that the miners can find another revenue stream to help support their business, and as long as they're continuing to stay focused on securing the Bitcoin network and not the side chain, life is good. Next up from Decrypt, this was posted on September 20th. MicroStrategy bought another $458 million in Bitcoin this week. Business intelligence firm MicroStrategy has purchased 7,420 Bitcoin for approximately $458.2 million, bringing the company's total holdings to 252,220 Bitcoin, with an average purchase price of $39,266 per coin. With the purchase, MicroStrategy has only emphasized its status as the largest corporate treasury reserve holder of Bitcoin, with its stash of Bitcoin now valued at $15.9 billion as of this writing. An SEC filing on Friday also revealed that MicroStrategy raised $1.01 billion through a convertible senior note offering, with the proceeds earmarked for further Bitcoin acquisitions. While it is not confirmed whether this specific purchase was funded directly by the $1.01 billion note, MicroStrategy's strategy has frequently involved using both debt and internal funds to accumulate Bitcoin. Michael Saylor's firm has steadily increased its holdings over the last 4 years despite market volatility. Just last week, the firm disclosed a purchase of 18,300 Bitcoin, about 1.1 billion worth at the time. That was the firm's largest purchase since 2021. And then earlier this week, the firm said it planned to raise 700 million to both pay off earlier debts as well as purchase even more Bitcoin. Saylor, the co-founder and former CEO of MicroStrategy, has been one of the most vocal proponents of Bitcoin as a corporate treasury asset. He first made waves in 2020 when MicroStrategy became the first publicly traded company to convert a significant portion of its cash reserves into Bitcoin. Since then, Saylor has advocated for Bitcoin as a hedge against inflation and a more secure store of value compared to traditional assets like gold or cash. Saylor has emphasized his belief in Bitcoin's long-term potential, even in the face of market fluctuations. He noted that Bitcoin's decentralized nature makes it a superior asset in uncertain economic conditions. According to Saylor, Bitcoin is the apex asset, and its ability to store value will continue to increase as institutional interest grows. The company's total purchases of Bitcoin now amount to nearly $9.9 billion. MicroStrategy's stock is up about 1% on the day to a current price of $146, pushing its year-to-date price jump to 113%. Next up from Yahoo Finance, not quite sure how to feel about this, but probably don't like it. SEC approves Nasdaq to list options on iShares Bitcoin Trust ETF. The United States Securities and Exchange Commission has approved Nasdaq Inc.'s application to list options on the iShares Bitcoin Trust ETF, marking the clearing of an important hurdle before derivatives tied to the product can begin trading. The contracts still need to be approved by the Options Clearing Corporation and the Commodity Futures Trading Commission before trading can begin. Other exchanges have also filed applications to list options on the iShares Fund and other spot Bitcoin ETFs. Getting the SEC to come around is a big step toward listing options, which can be a huge help for attracting more and larger investors, as well as bringing in more liquidity around the ETFs, said Bloomberg Intelligence ETF analyst Eric Balchunas. The ETF, which trades under the ticker IBIT, is the largest exchange-traded fund that invests directly in Bitcoin. It's gathered about $22.7 billion in assets since it and competing products were approved by the SEC in January following a lengthy legal battle by Grayscale Investments, an issuer of crypto funds. So this is just more of the Wall Street casino. The ETFs aren't great. Options are even worse. And if you're going to buy Bitcoin, you should just buy it and hold it in self-custody and don't do the ETFs. That's my advice anyway. Cointelegraph, September 20th. Germany seizes 47 crypto exchanges tied to underground economy. The German government has just shuttered 47 cryptocurrency exchanges, accusing them of knowingly allowing an underground economy for cyber criminals to flourish. It is now turning its attention to its potentially criminal users. They have been deliberately concealing the origin of criminally obtained funds on a large scale through the inadequate implementation of legal requirements for combating money laundering. Germany's Federal Criminal Police Office, Frankfurt's main prosecutor's office, and the country's Office for Combating Cybercrime alleged in a September 19th statement. The authorities allege that the users of the exchanges include ransomware, botnet operators, and black market traders who use the services to convert money obtained through criminal means into the regular currency cycle. The websites of the seized cryptocurrency exchanges now display a clear warning from the German government. We have found their servers and seized them, development servers, production servers, backup servers. We have their data, and we therefore have your data. Transactions, registration data, IP addresses, the authorities wrote. Our search for traces begins. See you soon. However, the German authorities suggested that a widespread prosecution wouldn't be possible as many of these perpetrators reside in other countries. Since cybercriminals often reside abroad and are tolerated or even protected by some countries, they often remain inaccessible to German law enforcement, it wrote. It is alleged that one of the seized cryptocurrency exchanges, exchange.cash, had been active since 2012, facilitating nearly 1.3 million transactions for 410,000 users. 60cek.org, Baxman.com, and Prostocash.com were among the other seized trading platforms with high user and transaction counts. The German government was one of the largest Bitcoin holders in the world until recently, when it offloaded nearly 50,000 Bitcoin worth $3.15 billion at current prices across several transactions in June and July. The funds were seized from the piracy site movie2k.to in 2020. And they have paper hands. And finally, an article from Bitcoin Magazine, Santa Monica Bitcoin Office case study to be presented at CMRTA annual conference. Proof of Workforce, joined by Santa Monica Vice Mayor Lana Negrete, will showcase the Santa Monica Bitcoin Office in the upcoming California Municipal Revenue and Tax Association annual conference on October 9th and 10th. They will present a case study on the innovative municipal office, the first of its kind in the U.S. Launched in July 2024, after a unanimous City Council vote, the Santa Monica Bitcoin Office aims to educate residents about Bitcoin's potential while identifying industry partnerships to support economic recovery and job creation. Proof of Workforce is excited to share our experiences and insights with other municipal leaders at the CMRTA conference, said founder Dom Bay. Already, through our early initial work, there are many valuable lessons learned and opportunities that have emerged. Vice Mayor Negrete added, "We have received an overwhelming amount of interest and positive engagement as we continue to learn about Bitcoin as a community." The presentation will highlight challenges and opportunities in implementing the novel office. It will offer lessons in other municipalities considering similar initiatives. The CMRTA conference, which convenes municipal finance experts from across California, covers topics such as personal branding, regulatory updates, ballot measures, and emerging issues like Bitcoin. Proof of Workforce coordinates the Bitcoin office at no cost to Santa Monica. The nonprofit provides Bitcoin education and adoption resources for workers, union, pension funds, and cities. And shout out to Don Bay, who's also a firefighter and a great Bitcoiner. So you love to see it. Finally, wanted to highlight this week's featured post on the Bitcoin Fortress Substack. Article is entitled Top 10 Ways to Stack More Bitcoin. So check it out. I'll put a link in the show notes along with links to all the other articles that I reviewed this week. And last but not least, shout out to the top boost on Fountain last week at God's Death with 536 sats. Thank you, sir. And thank you all for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack. It's located at bitcoinfortress.substack.com. And you can follow me on Nostr. I am Nostr only. My NPub is in the show notes, so check it out. It's great. I like it. It's way better than other social media. It's positive. It's not negative. And with that, I will talk to y'all next week. Bye-bye.